We're now looking at the currency market with Adriaan du Toit. He is macroeconomic strategist at Standard Bank here in Johannesburg. Adriaan, a very good morning to you. Let's begin with perhaps your range for the rand today, particularly given the pile-up of bad news that we're beginning to get. We had China this morning slightly disappointing the markets, and we also had, of course, the German finance minister saying, do not look ahead to that European summit for a solution, definite solution on France. And then we have Moody's threatening that it will look at its rating for France with potential to downgrade that outlook. What's your take for the rand today?
Well, that's quite right, and we've seen over the last few days or weeks, really, that guessing trading ranges before the fact is quite a difficult task in this volatile environment. What we've seen is that there's been quite a bit of bad news, or relatively bad news, over the last evening or so, with Chinese GDP coming out a bit lower than expected, and also the concerns about Europe. And I think it is a bit premature for the markets to just jump to conclusions, because, to be fair, it's unlikely that it is possible to wave a magic wand and that all will be well, considering the difficulties that we face within the Eurozone specifically. So to pinpoint a range is hard, but what we see is that if the rand breaches this 804 handle, we could very swiftly go to 820, and as we've seen, that is not quite a significant move in the current environment. Bottom line is that risk aversion is likely to increase again, as we've seen, and then we could see the rand bears coming out again in full force. The bottom line is that, yes, fundamentals have seemingly deteriorated, but in my mind, not to the extent that you should see a significant flight to what is perceived to be quality.
Yeah. How big a negative was that news coming out of China, particularly given the fact that now China is South Africa's biggest export destination, according to you guys at Standard Bank?
Well, it's not only according to us at Standard Bank, it's according to the official trade statistics, but we agree with that. But the bottom line is that, obviously, if you have such a significant trade partner, you see a slowdown in economic activity in that region, now it will naturally affect your economy. And you just add to that the financial woes that's spilling over, the contagion effect that's spilling over from Europe and US, and then you're faced with a pretty tricky situation. When you look at the GDP figures out of China, it was expected that there will be a slowdown. It was more than expected, but I still don't think it's dismal at all. The Chinese economy is still about 9% bigger than it was a year ago, and there's still signs that there's life in the economy. What you need to look at is what the monetary authorities have been trying to engineer in China, and they've really been trying to slow down the economy. So they've been successful in doing that. It's slightly negative for South Africa, but at this stage it still seems like the Chinese economy is headed for a soft rather than a hard landing.
Yeah. Adriaan, given the large dark clouds that we're seeing on the international front and that have been moving the rand pretty much for the past few months, should we even be talking about the numbers that we're going to see tomorrow coming out, the CPI numbers, as well as the retail sales data that's coming out tomorrow?
Well, I think they're still important. They're still important for domestic considerations, and they're probably more so the CPI, because what we could find is that CPI could rush towards that upper end of the target band quite quickly. We're actually predicting a CPI increase of 5.8%, and if that is the case, if a 5.8% is materialized, then it's very likely that we can see a breach before the year end. In other words, a breach of the target band of upper end of 6%. Now, when faced with a situation like that, the MPC might find it very difficult to have a balanced view, because if inflation continues to rise and it rushes above the target band, even if you have the global economy falling apart, so to speak, it would be very hard to cut rates. So I do think that tomorrow's CPI print would be particularly important, and retail sales maybe to a lesser extent, but still, if you have some buoyancy reflected in retail activity combined with a relatively elevated inflation print, well, then the risks or the chances that's been priced in of another rate cut by the Reserve Bank would probably diminish.